trying to justify. I like the stories.
Hey, it's Soleil, and this is episode 600 of the Orange Pill Investor. And today I'm gonna, I guess everybody's talking about the Coffeezilla coverage of Stretch, and if everybody's doing it, I mean that means I should do it too, right? Um, I wasn't going to, but it was just too easy. It was just too easy to cover. Now, the only other person that I've seen give at least a passing grade or kind of like allowances for Coffee's coverage of Stretch was Radu, and it was kind of along the lines of like, hey, healthy skepticism is reasonable. I'm not going to cover the original coverage of Stretch too much, but I will say, as it seems like he's supposed to be an investigative journalist. It was very shallow understanding or research done on the products. And his main criticism of the way that Strategy was marketing Stretch was it was basically to the rubes, right? Like it's people who are not savvy, with investing, like somebody who just had a checking account. Oh, hey, I'd rather get 10, 11% on my savings or my emergency fund than the shit that I can get at the checking account. And if all they saw were these AI commercials or whatever that doesn't have the disclaimers, like, McDonald's is just telling you how great their food tastes. They're not telling you if you eat it 3 times a day that you're going to get heart disease or whatever. So Coffee was kind of like, I guess he was annoyed that every single disclaimer, like if you invest in a stock, you could lose your money or whatever. That wasn't like emphasized. But to be fair, like I've admired Coffee for quite a long time, and it's really from one simple thing that he covered, which was this guy Carl Dom, who has a real P&L channel, and Coffee was basically exposing these grifter option seller courses where people would only post their wins, they wouldn't post their losses, and they were charging these exorbitant fees for options coaching and options courses, and they weren't really showing their P&L, except he found this one guy, I think his name is Carl Dom, and his show is literally called Real P&L. And this guy was like a legit option seller, and he posted his actual P&L. And it's funny because um, that series that he did where and he interviewed this guy was the inspiration for me being extremely transparent with my trades and just like, here's all my trades, right? Um, so it's kind of funny that I owe the absolute transparency of the way that I post my videos to Coffee, and his interaction with them. Uh, so that's kind of a funny tie-in here. So I really want to give Coffee the benefit of the doubt here. Guy probably means well, but when you've built your brand on exposing things, you're always looking for something to expose. So it's going to benefit you to view everything as a scam or a grift. Like, healthy skepticism is not assuming everything is bad until it's proven good. Healthy skepticism is like, don't trust, verify. That's what Bitcoiners do. But it's to his benefit to find a grift everywhere he looks. And I don't want to make it sound as harsh as this, but like, that's the same way, it's the same kind of perverse incentive that government bureaucrats have to not fix problems. Like it's kind of the opposite of what he's doing. Like, well, actually, no, it's very similar. So, in the bureaucrat's case, though, is you want to find a problem everywhere, demand more money for your department, and then never solve the problem. But in Coffee's case, he wants to find a grift everywhere so that he can talk about it and expose it and, you know, hopefully benefit people, but it's going to benefit him because people are going to like and subscribe. And so I think there might be a little bit of a bias on his part to see negative everywhere. And, the seems too good to be true thing is a pretty good red flag to watch out for, but it kind of benefits him to just see red flags everywhere and be kind of like, the sky is falling or the boy who cried wolf kind of a thing. And I won't do like a whole ass reaction video, but this one, oh, this one is worth taking a look at. This is a very short one, and he actually did it on his other channel, Voidzilla. This one is just commentary, right? He's just reacting. So there's going to be less actual journalism here. So I kind of actually appreciate that this is a completely different channel. I would probably expect the Coffee channel to be more thorough. So I'm not going to really criticize this channel for being uninformed because it's just him ranting, right? You shouldn't really expect anything more than color commentary from something like this. But he kind of went all in on Jeff, and he did it in such a way that is doomed to failure, I think. So he goes in here and he's like, well, hey, these guys are paying more interest than Stretch. Why wouldn't you just go with these guys? And then he's like, well, hold on a second. These guys are backing their 13% fund with an 11% fund. And he says something like the math doesn't add up. And I mean, anybody who's watching my channel already knows, but if anybody who only understands or, follows Coffee is watching this for the first time, they don't know that Jeff worked for insurance companies and actually does like insane math to calculate the risk for reinsurance companies that insure insurance companies. So I don't really think Coffee wants to get into like math Olympics with Jeff. We used to do the spreadsheet at the beginning of every episode, and he's got like Excel spreadsheets with 21 fucking tabs open on it, right? Just calculations everywhere. Now, I don't want to steal some of Jeff's talking points here in case these guys do debate, but okay, so the point is, if you have to carry a cash reserve to back up your product, like literally holding it in cash would be the most dumb thing you could do because it's a melting ice cube and it's being devalued by at least 10% a year. You could hold US treasuries, which is what a lot of places do, and you could earn a couple of percent here and there, but you're still getting wrecked on inflation. Or if you recognize the value of Bitcoin as pristine capital, you could, instead of holding cash that earns nothing or US treasuries that earns a little dribble of returns, you could hold a product. Now, that pays 11%. If you have confidence in that product, it's not the alternative is it pays 11% compared to 13%. The comparison is against the alternatives to carrying cash. And 11% is a hell of a lot better than zero. And 11% is a hell of a lot better than whatever the hell US treasuries pay. If you are a statist, you might argue that you think US treasuries is safer. It's the risk-free rate or whatever. As a paranoid crypto anarchist, I don't have any trust in US treasuries, and I would be way more supremely confident in a bond backed by Bitcoin than by the proof of war network. And so I I I would encourage Coffee to have this debate. And furthermore, let me just scroll up. And here's the kind of really annoying part. So he starts to shit talk Jeff about is like, oh, you're the chief risk officer. I'm worried about this. But then he goes straight to this guy who he contacts him and then gets blocked. Where's the block? Where's the block? Is it here? Yeah, he offers to talk to him. Shit. Anyway, yeah. Anyway, I think he posts a screenshot of him being blocked by this guy. Anyway, the point is, you're reaching out to this guy. You must want to have a conversation, but oh yeah, so blocked me immediately, blah blah blah. Well, guess who's not blocking you? Jeff Walton. Not only is he not blocking you, he's extending you the opportunity to talk, which is the exact thing that you were requesting from this other fucknuts. So I suggest that if you are interested in doing some investigative journalism and talking to people, just like you spoke to Carl Dom when you were investigating the option selling courses grift, talk to this guy. I talk to him all the time. And what is it? What was that quote from my cousin Vinny when he's trying to get his girlfriend up on uh, on the stand, and he's like, "If what, go ahead and voir dire the witness. I'm sure you're going to be more than satisfied." So yeah, have a little conversation with Jeff. I think you'll be more than satisfied with his understanding of math. Um, yeah, I think that's where I'll leave it. You should just do that. And if you keep it respectful, I'm pretty confident Jeff would do the same. He loves to talk about this shit, and I think he'd probably learn something. Or if not, it would uh, it would at least get some a little bit more fair talking points out in front of your audience that might be just um, taking your snarky comments and quite honestly uninformed comments a little too literally. So take them up on it. If you're serious about wanting to, talk to people who you think, could be grifting, yeah, give that a shot. I think you'll be a little bit surprised at um, you know, how refreshing and transparent these people are. Very similarly to the interview that you had with Carl Dom, who, is happy to post their P&L. Um, these companies, Strategy and Strive, they've got websites, dude, and they've got every single detail about their companies online. You can check them out. Anybody with internet access can click, and you can find out just about anything you want to know. Uh, so, how many Ponzi's will let you literally just look at every single asset, and you could just easily calculate the net asset value of the company, and you can see everything that they're doing and when they do it. It's it's kind of hilarious. So as opposed to this guy who immediately blocked you for asking questions because he knew he was going to be exposed, you're actually getting the invitation. Like, you should be sending Jeff the invitation, and he's inviting you ahead of time. So take that gift while it's on the table. That's my advice. What's up, Buffalo? 600. Yeah, yeah, I know. I wish I wish my episode number was was the strategy was the strategy price. That would be nice. It would be Going up forever, Laura. Sandeep says coffee fool is a fucking idiot. In this case, he's out of his depths. Watched 20 minutes of it and then could not take it anymore. Yeah, I did watch the whole thing. I refused to watch it again, though. I was like, I should watch it again and brush up for this video. But I was like, nah, I can't. Like, I'm not gonna watch it again and take notes and really get all into it. It was, I wasn't gonna. It was okay. I watched it once at 2x speed. That was enough of my life that I can't get back. What's up, Voyager? Appreciate it, man. See, the beauty is that Coffee Fool and anybody who listens to him will just lose out. Let them keep their savings in the bank. Yeah, I mean, it's fair. It's fair to say that your savings account is insured up to a certain number, but so is your portfolio, right? And I think your portfolios are actually insured to a higher number. I can't remember what FDIC insurance insures you up to, but the portfolios are also insured. But it's not going to be like it's a little. I guess it's a little bit different. If Tasty Trade went under, insurance would kick in, but Tasty Trade's not going to insure me if Stretch just goes to $10 a share. So that's a little bit different. How would I don't know. What are the risks? Are there any risks to your savings account? Like a dollar's not going to be worth less than a dollar. So yeah, I guess that doesn't really make sense. So yes, that like he's right when he says that there are additional risks that people should be aware of, but it's a little bit rich. All right, with that, of course, here you can look at my notifications. Here you can look at the page while I sign in. Where's Here it is. I should put the music back on. All right. Now, I was talking all that shit about being transparent, and then I fucked up and accidentally made a trade before I started the video, but let me just call that out real quick. So what I was trying to do was figure out what was the most capital efficient way to generate some cash, because it looks like tomorrow this is going to cost me like 10 grand to roll. Maybe I'll take this off, because if the price does crash back down to 130, I really don't want to have these positions on. So I was trying to look at Cypher, and I was like, all right, if I sold Cypher contracts for, what was it, 43 days to expiration, 15. What if I did like 100 of these damn things, right? And I was like, all right, that's about a 29 delta. It's basically 30 delta. And this would cost me about 15 in buying power reduction, but I'd get a $13,000 credit. I accidentally double tapped the submit, but I did it for Strive. Oh God. Okay. And so I was like, all right, well, maybe I'll just take this off. That would be a day trade strike. If your account's worth less than 25 grand, I think that's still the rule. That if you get enough day trade strikes, they'll suspend your account. But if you have over 25 grand, you don't have to worry about that. So this really shouldn't be a problem. But I don't really need this until tomorrow, so I'm kind of tempted to take it off. and just eat the day trade strike. So unfortunately, the bid-ask spread can kind of screw you sometimes. And so I'm going to try to get out of this for the mid price, which technically I guess I'll make 3 cents per contract if I get out of this. Nope, didn't fill. All right, let's see if I can get out of here for 1 penny more than I... Oh, actually... Oh, they actually want more. Okay, so that's annoying. I could pay 29. It's about a nickel. It's 500. That'll cost me 500 bucks. I don't like that. I think I'm kind of stuck with this because I don't want to eat the cost. And here's another reason why liquidity is so important, because if I made that mistake in SPY, the bid-ask spread is so tight that I would only lose like 4 cents per contract. I could immediately just say, ah, shoot, I screwed the pooch here. But some of these cheaper stocks and stocks that have less liquidity, if this costs me 5 or 10 bucks a contract, you know, that's unfortunate. But let me just see if I can yeah, I did not mean to take this many positions. Let me see if I can get out of here for just 2 more cents. There we go. Okay. So I deserve to pay that price. That was my penance for not paying attention and being too quick on the draw. Okay, so not only that, but now I'm using $30 in margin again. What a pain in the ass. All right, what do I have here? I guess I could have left one of those on. Or how many do I need to leave on to at least make that positive? That's fine. I'll deal with it tomorrow. All right, I deserved that. That will teach me. All right, Cypher. So even though the prices have gone up, and it looks like the IV rank is low here, the premiums are actually insane. The premiums, you know, for 1 day, sell a cash secured put, this is like 2.5% for 1 day. For 8 days, it's like 7% returns for 8 days. It's pretty crazy. You know, can Strive crash back down to 10 or below 10? Of course it can. And that's kind of why I was going to 43 days. I wanted to give myself a little bit extra time to be right. So if I got to put that trade back on tomorrow, I will. But for now, you know, do I deal with this today or do I kick the can until tomorrow? I would definitely want to do this in the morning so that I don't get exercised. Wouldn't be the end of the world if the shares got called away and I had to buy them back. It would reset my cost basis and my long-term capital gains tax potentially. But that's not really a problem because I'll probably be holding these forever. And my cost basis is so bad that I wouldn't be paying profits on this. This would actually be tax loss harvesting. So the only problem, actually, now that I think about it, the problem would be I'd get hit with the wash sale rule if I bought these back within 30 days. So I'd have to do something sneaky if I wanted the exposure and like form a synthetic. So I could do that for 30 days. And then sometime after May 16th, I could buy those shares back and I wouldn't violate the wash sale rule. All right. Well, so with that being said, these are in the money. They're $14 in the money, which means that So the mid price is 1330, 1370. It should be a little bit more, not less. All right, so the bid ask. So halfway is about, yeah, it's about 1370, the mid price here. So this actually might be worth rolling because there's no extrinsic value left. There's actually negative extrinsic value left. 144 bucks. I guess that makes sense because the delta on this is 1. It's literally slammed to 1. So there's no reason for me to hold this position because it's not really going to get any cheaper between today and tomorrow. Tomorrow at 3:59 p.m. when there's literally no time left, and if the price is 144, then this price will basically be 14. It'll be the exact same it is today. So I either roll this for maybe the next week, get a little bit more time value here. If I roll to the exact same strike, it would be $15 and like the tiniest of credits. Like I'd be rolling it for 75 cents of extrinsic value, and that doesn't make sense. So that's funny. I'll probably just put that fucking position right back on. Except, oh my God, now I would get hit with the wash sale rule for ASST because I sold it for 124. I bought it back for 129. And that's taking a loss of 5 cents per contract. And if I sell that, turn around and sell that again, it's not a big deal that it's a day trade, but I would probably, would I get hit with wash sale rule? Because I probably wouldn't close that position for another several weeks. So maybe I just do it with Cypher. It just gives me one less position to deal with too. But I might start getting concentration risk because I've already got a bunch of Cypher positions. Let me just see what I'm dealing with here. Let's do 100 of these things. I don't need quite that much. 75. That'd give me the 10 grand. Let's just see what it's going to cost me. If I roll, let's just roll it up to the 140. How much extrinsic value here? It's still in the money. It'd be $4 in the money, and I'm collecting 760. So that would be $3.60 of extrinsic, and I wouldn't have to pay nearly as much. What did I get paid for these in the first place? 360 is not bad. That's like 2% of the underlying price in a week. And I wouldn't have to pay the extra 4 grand. Now, if strategy keeps running, then that's a problem. But let's just do this. I kind of like this. If this fills. It's a little bit rolling to your right, but I'm not rolling from the same strike. But I am rolling in the money just in case, so I don't get too whipsawed on this position. All right, so what did that do to me? Now I'm 7 grand in the hole again. I could add some more cash secured puts in strategy, but I do have such a high concentration. I think I tested it out. I could add like 5 of them, but if I add 6, the concentration risk goes wonky. All right, so let's do this. I've got 4. Let's see how many I need to add to come up with 7 grand. I have 4. If I add 16, that would give me to an even 20. That's not even close. Let's do 36. Closer. 56. That'll do it. All right. I think the premiums were a little bit better on Strive, but I bumfuggled that one, so this will have to do. You know, the alternative, I could have let 100 shares get called away, something along those lines. Really didn't have enough value in these poor man's covered calls. And I would like to continue to see how these play out anyway. I'm looking to try to add leverage at these prices, not lose leverage. So the other thing that I had mentioned I was talking about was, potentially shorting stretch to get cash to buy shares. But I kind of just realized that that's just selling cash secured puts with extra steps, because the cash secured puts are already not, it's generating premiums without counting against this cash balance, which would be the whole point of shorting stretch to buy shares to turn around and sell covered calls on. So kind of decided that the cash secured put route was just easier and cleaner. I don't need to screw around with the whole shorting bullshit. And then trying to avoid ex-dividend date. The borrow rates were actually very, very reasonable. It was like 1/3% for the whole year. But, maybe I'll wait until Bitcoin runs to 250 a share or 250 a coin, and then I'll short Ethereum or something. That'll be more fun ahead of the next bear market. All right, so strategy. I rolled this out to next week. I've got some extrinsic value here now, and that's good. It's also $4 in the money, which gives me a little bit of a cushion if we crack, back down under 140. I don't hate it. Tesla, I also got wrecked on this one and rolled this one out. This is the other one that I was playing the 3 times a week game, so I don't have that to deal with anymore. This one's got plenty of time left on it. All right, the IRA. Plenty of time left. Plenty of time in extrinsic left. All right, the poor man's covered calls. These are finally going in the right direction. This one might even be somewhat profitable. These are still all losers. All right, so this one, it's like 4 cents left. Just one trading day between today and tomorrow. Prorated out, that would be like $20 for the week. So even though this doesn't look like much, this is still fine. I'll just deal with it tomorrow. Probably buy it back for a penny. And then this one, though, is only worth 3. I guess prorated out for a week would be 5. But, I mean, it's only going to get And again, this is only going to get so much cheaper. I don't have enough money to roll these up for a credit. So maybe I should just roll them to next week now. Yeah, just wait till tomorrow and deal with it then. Wolf's got time. Long-term play. I got the 64 shares of stretch. So if I exited these positions now, I'd take a 80-cent haircut. I just got paid the basically the 1% dividend. So that would be fine. That wouldn't be the end of the world. But I'm using these as collateral for the cash secured puts anyway. So there's no reason for me to really even exit this position just to have to re-enter it. Besides the margin efficiency for SATA is not as good, so I don't really think I could afford to rotate. I guess I could rotate half. I could sell these 64 and then rotate 32 shares into SATA for the other dividend. And if they get it pumped to 100, who knows how much it would crash back down to again. So I don't know if that's worth my time. Long term, plenty of time, plenty of extrinsic. Not much left. This one, since it's not a cash account, I can probably afford to just roll this now. So maybe I'll just do that. Let's roll to next week. I'm sorry. Actually, I could probably, can I roll to tomorrow? I can roll this up for a credit even just for one day. Whatever, that's fine. Let's roll the strikes up. 1350. It's kind of pushing it a little bit, isn't it? That's whatever. Oh, yeah. I don't have the buying power for that. Yeah, my maintenance excess is non-existent. So, in order to do that, I would either have to, you know what? I could hedge this out. I should probably be taking, I mean, this is like a 50% return. $1.90. Or I could sell a couple of shares of stretch. What should I do? Or I could take one of these positions off. Or just close one. Let's start with that and see what I want to do. Ah, shit, I was supposed to reshare without volume. Hopefully that's not too loud, y'all. All right, that's giving me plenty of cash to play with. Maintenance excess. So now I can roll this up for a credit. Which is pretty insane. It's like 2.5% for a single day. All right, $300 maintenance excess. Can't really do much with that, but I could peel off just enough stretch shares to take another position. Let's sell 10. That would give me $500 plus 3. Wait, what's it going to cost me to put the other one on? I need $600 in. I need maintenance excess. I need another 300. Each one's going to give me 50 bucks. So I got to sell 6 to get 300. Probably 7. Let's do 6. See if that gets me all the way there. $5.99. So if I sell, how's that? Nope. I gotta get one more, I think. Let's try this again. There we go. There we go. Finally. All right. That's kind of the whole point of what I use Stretch for anyway. It's just my collateral that I'm using to guarantee the cash secured puts. So that works. I think that's everything in that account. All right, Sandeep says, bought more Stretch this morning for $99.20. Intend to sell for $100 in 2 weeks. About a 23% gain, no risk in my opinion. Wait, what do you mean by 23%? Oh, because it's such and such percent, but like prorated because it happened in 2 weeks. You're talking about for an annual return, prorated. All right, so again, this $12 put expires tomorrow. I don't have the cash to roll this up. I only have $72 of buying power here. So I can take one of these off and keep the one that I want. So let's just close this one. And then roll this strike up. 0.3334. Oh, I think I sold that one a little too short. I think I miscalculated. I'll deal with this one tomorrow. Damn, even this one went in the money. That's crazy. Riot. I thought that one would be closer to being ready to roll. Apparently not. All right, so what's my buying power? I've got exactly $1,000. But I can sell my other 2 shares of Stretch to roll up another position. What was the CLSK one that I just took off? That one's trading at 1143. Yeah, let's do sell them. And this one that I just rolled up, let's see if I have enough. 1350. No, I have 1200 exactly. So what's the $12 put? Is there any? There's no juice in that one for tomorrow, but for next week, it's decent. So maybe I go out to 45 days. Add another one of these. Let's say I have 1200. All right. I think all my buying power is used up again. Yep. Actually, I guess I didn't need to sell that other share of stretch. I've got 147 in buying power, or I could have just sold the 13 strike instead of the 12. Or the, yeah. 12 is a little safer anyway. There's no reason why Strive can't go back to 10. All right, I'll deal with these two tomorrow. 80 cents in 2 weeks. Yep, got it. Not as good as 30 cents in 8 hours. I'm trying to get on my SPY puts for today, and those have a lot of risk. Yeah. Man, I need strategy. I need strategy to do dailies. That would be nice. That would be kind of insane. All right. That's it for today.